Let's bring in Loop Ventures founder Gene Munster in Minneapolis. So, Gene, what are you listening for? And the commentary about India is interesting, and I understand that this could be a headwind, but it certainly doesn't account for, I would imagine, potentially $4 billion in shortfall between the lowest end of the range for first quarter revenue guidance and what analysts were expecting.
Melissa, it might. I think that's
really?
been obviously a pain point for a lot of companies. So I think, it's really 1.5% because they typically do the high end of the range. So I think that probably does account for it.
Oh, so it could be all India in that $4 billion potential miss, depending on how you want to look at the guidance versus. What are you going to be listening for in the call then?
Profitability. Prime growth is going to slow. That really accounts for, call it, 50% of their profitability. So we're going to be focusing on that. And the second is what they're going to do in retail stores. That's going to be a big push for the company. I know it was down 3%, but the overall retail opportunity is huge for Amazon. So we look for pieces on that. And then the last piece, just in terms of how they're going to compete with Facebook. That's obviously a growing concern based on the Facebook call last night.
In terms of the same-store sales, the slight decline that we saw, is that all Whole Foods, or does it also include their efforts in their own retail footprint?
Probably all Whole Foods. They have, call it, 550 Whole Food stores. There's only 100 other stores, which really include the Go stores. There's just a handful of those. They have also these 5-star or 4-star stores, and also these pop-up stores. So, Melissa, those are really too small to really impact the overall number. The key is that Whole Foods was clearly a problem in the quarter, and I think that that doesn't change the bigger picture here, which is pretty simple, is that traditional brick and mortar is critical to the Amazon store. I think that largely gets lost. And for them to continue to grow at this, call it, 14% pace, they need to actually do more in traditional brick and mortar. And so I think that's going to be a key focus. Most analysts might not pick up on the call tonight, but I think as we move forward, we're going to hear more about that.
All right, Gene, we'll let you jump on that call. It gets underway right about now. We'll check in with you a little bit later on. Gene Munster of Loop Ventures. So Facebook and Netflix surged after their earnings report. The NASDAQ just had its best month since 2011. So where's Amazon at this point? It's down 0.8% in the after-hour session.
Well, listen, this is the second consecutive quarter they've guided their sales down about 5%. And the fact that the stock is only down a couple percent right now, I think is actually pretty impressive. I thought if there was any commensurate downshift or deceleration in operating margins, then I think the stock would be down a lot. But, right now, consensus is calling for 20% revenue growth in 2019. That's down from 31% last year. So maybe expectations for revenue deceleration are kind of worked into the stock here.
And it's had a big bounce. Like if they had announced this coming the day after Facebook puts up huge numbers, I think makes it a lot harder to.
What do people want with Amazon? Do you want growth? Do you want profitability? If it was a couple of years ago, it was even a year ago, we said, hey, I want to see them turn the lever and become more profitable. Third record profit quarter. That to me is something that's very impressive. I like to see the fact that they can actually make this business more profitable. It's also nice to see that AWS, which is again slowing growth, but again it's 10% of their revenue stream, but it's probably 25 to 28% of their profitability, and I think that remains so. So I'm actually I think Amazon is growing into a valuation that for a guy like me is difficult, but relative to themselves, bravo.
The fact the stock's going from 13.50 to 17.25 or so, effectively in a straight line over the last month or so, and the stock's not down more than it is, to Dan's point, I think it's encouraging. The number I come away with, and you mentioned it, operating margins are now 5.3%. Street was looking, I think, for 5.1%. They continue to move up the ladder on operating margins. That's very encouraging. And the retail stores I think they missed by about 300 million or so. That was offset, not that it matters, but there was an offset to that in online stores. So it zeroes itself out. So I don't look at that as that big of a deal.
It's interesting that Gene spent so much time talking about retail, bricks and mortars, and then also talking about geographic. I mean, I think Deirdre said it. They've spent a lot of money trying to get into a market like India. And, so if they can actually explain away that $2.5 billion shortfall that they're calling for is this short-term hiccup, these are investments in a market, which $1 billion and 3 people or something like that, in an emerging, it's the China story 15 years ago. That's India.
For Gene to say that potential shortfall, if you look at the bottom end of their range versus analyst consensus could be all India. I would imagine the stock would turn around in the after-hour session if it were really that case.
We're not trading Amazon for India, and we are trading Amazon for the investments they make in their business for the future, which have been proven to pay off. So you do the math. India is not something that bothers me.